10,000 options contracts on Victoria's Secret at 10:55 a.m. What do they mean? In this video on May 2nd, 1:37 p.m., we will be analyzing these unusual options, 10,000 of them, to determine where is Victoria's Secret headed to based on these large institutional investors. Victoria's Secret had a drop of 3%, gap down as you can see today. And so is this going to keep dropping? In this video, we will address this and analyze these unusual options and then share the trade that we did based on these unusual options. You can see here as we zoom out more, when was the last time Victoria's Secret was this low? Well, back here in September, beginning of October, it had dropped down to this $29 level where we currently are as well. And after it dropped, it rallied up. You see here on October, the next trading day, it started to rally. And so will this repeat itself? We'll have to take a look, right? So you see also this beginning of the year, it also had rally, but then towards the end of the year, it went down. So lots of movement on Victoria's Secret. So let's take a look at these unusual options. So this was done on May 19 contracts, 30 strike puts, and then the July 21, 25 strike puts, 10,000 of these. So let's take a look at these on the options chain. Here you'll see those 10,000 contracts here at the 30 strike puts. But you notice that the open interest is greater than the volume at 11,000. This leads us to believe that this was more of a closing order. Okay, so they had some puts and now they are taking profits because it had dropped below $30. So now their 30 strike puts are in the money. So now they closed these positions and took profits. And then after they took profits on this, they went out to the July 25s here. And what they did here was that they sold the put. So they were selling the put here, which is a moderately bullish, meaning that it will not drop below 23.6. As long as it stays above 23.6 by expiration, they will be profitable. And so this whole range here, since this is above that zero profit loss line here, we're currently at $29 on Victoria's Secret. So the idea here also is that you can also see these 30 strikes and 35 strike calls. You see lots of this buying here. You'll see here the volume here outweighs the open interest. Opening orders here, also see that on the tape here. Lots of this. As soon as this order was done, 2 minutes later, 10:57, July 21s, all the calls started to come in, right? You'll see that bullishness here. And so what that is telling us is, let's say, for example, they had sold this 130, right, for 130 credit at the 25 strike puts. They took that credit after selling it to buy, let's say, the 35 strike calls. So not all of it, because it was 10,000 of them, but you know, let's say they did 800 of them, right? So some of them were quite bullish. So then you'll see here, then this trade is this synthetic bullish trade, anticipating a bounce from this price point. If it doesn't bounce, they will still receive their $30 credit. As you see here, this blue line is above this zero profit loss. Only if this Victoria's Secret drops below $24, then they will be below that zero line and be at a loss. So $24 is below, it's basically below this low point. So when was the last time Victoria's Secret was trading below that? It hasn't, right? This year, 26 was for the past year in July 2022. So to drop below that is much more unlikely in their view. We have to maybe zoom back 3 years. Well, even 3 years, in the past 3 years, it hasn't dropped below 24. So that's why there's this very strong belief that it will not drop below 24 and that this will be a highly probable trade that either stays around this range where they don't lose any money but gain their $30 per contract. Yet if it goes and bounces up, they will be quite profitable. You'll see that per contract, right? And so based on this idea, our trade was to buy the 25 strikes. You'll see here our position over here. So we took the 25 strikes, and then what we did was we sold the June 30 strikes over here, calls. This is a bullish diagonal trade. We like this trade because you can see here that the extrinsic value here is 2.1. So we're selling 2.1 in extrinsic value and then buying 1.66 extrinsic value. Therefore, we are actually not paying additional extrinsic value. In fact, we're getting a credit in this extrinsic value. If you know, extrinsic value is actually the cost of an option. So we are actually reducing our cost of this options trade. It's if you understand options, there is intrinsic and extrinsic value, and we prefer never to pay a lot of extrinsic value because that is the actual cost of these options. And so if we can get a trade where we are not actually on a debit of extrinsic value, then that is great. So that's why we decided to sell this 30 strike here. And so then when we look at this trade, what this trade does then is, when we take this off, this is our trade. It's a diagonal bullish trade. What it does is it also lowers our break even. So currently 29, our break even is actually over here. So over here, $27 is our current break even for this trade. And so VSCO can drop and we will still be profitable. And the theta is positive, you'll see here. We have a positive theta trade, and it is also bullish because as the price goes up, it will be profitable. And so if it doesn't, and it starts to go down, we could cut our losses and reduce this loss as well, because we have a positive theta all the way up till this price point here. This purple line is below that blue line. Anytime that is so, then the theta will be positive. Okay, so we like this trade. This puts us more, there is more of an advantage towards this kind of a trade. And we don't have to spend that $2,500 on this trade. So this trade that the large investor did, they had to sell a 25 strike put, right? So this put here, to sell that 25 strike put means you're willing to own Victoria's Secret at $25, 100 shares of them, which is 2,500. So instead of using up 2,500 of buying power and capital, instead of doing this trade, we'd rather do this diagonal trade where it's currently going for $355. So we can put on as many contracts as we feel is best for our account and our position sizing to reduce the risk as we monitor this trade and see if there is going to be a recovery and bounce back for Victoria's Secret this month until June, where our first option will be expiring, the one that we sold. Okay, so that is our analysis of Victoria's Secret, ticker symbol VSCO. If you enjoyed this, learned something, please smash that like button. Comment below on what you think. Very interested in what everyone is doing on this trade. And please subscribe and smash that like button as always. Thank you and take care, everybody.